imagine for a minute that under normal conditions, you'd have liquidity pooling, up at the highs somewhere, up at whatever level these highs are reacting to, and down here, okay, maybe a little bit at these lows. What happens is that before major news events, this liquidity gets pooled, and liquidity moves away from the market. So this liquidity here will get pooled, as will this, and it will start pooling at levels further away from the market. And it moves away from the market because traders they're expecting or anticipating and protecting themselves against volatility. And as a result, it's kind of a self-reinforcing dynamic. Price just blasts through this level, and it reacts down at this next area of liquidity. So, to be a good price action trader, you have to be aware of news events because they're going to have a big impact on the trading environment. And unless you're in a position to judge the significance of news, then I just recommend steering clear of news altogether, at least until price settles down. And by news, I don't just mean news. As I explained in the first webinar, price action itself can take on a significance of its own, such that an unusually large or high momentum move can kind of take on the character of news. Okay, so a move like this one here on Bitcoin is an event in itself, and will cause people to withdraw liquidity from the market, and that will fuel or exaggerate the move down. So just like you, they don't want to get run over. They being whoever's providing liquidity. So what happens is liquidity moves away from the market. Anyway, that's a bit of a side note. So be careful trading news because we expect volatility, and watch out for price action events, impulsive moves, in other words, because although these moves do tend to be illiquid, they'll often move a lot further than you might otherwise expect.